Esili, great to have you with us on Closing Bell. Let's first start off with the top line numbers coming in above analyst expectations. When we're looking at 23.8% growth to 230 billion naira rather. Were you impressed with the rate of growth in Nigerian Breweries sales for the year?
Those numbers were actually quite in line with our expectations and were driven primarily by organic volume growth. And it really didn't come as a surprise. But yes, earnings numbers at the bottom line did come in slightly above our expectations. I think the Nigerian beer market has had a very strong 2011 year. Yes, some players have had softer volumes, but I think the broader market is still doing relatively strong, and that's what's really supported Nigerian Breweries' performance on the top line. And I think that they've also been a roughly strong pricing impact as well.
Of course, they've also included the acquisitions in their numbers, and as you say, the organic growth coming through there. There were concerns, however, that this would impact margins, and that hasn't been the case. This is translated into profit before tax increasing by over 25%. It's a really strong number that we're looking at there, 56 billion naira. Just walk us through the type of efficiencies that these acquisitions have been able to bring with them for the group.
I think it's wrong for the market to credit, the performance, Nigerian Breweries' performance in financial 11, as being attributed to the recent acquisitions. The truth about it is that those three breweries only contribute roughly about 2% to the numbers that you've seen. I think you're definitely going to see some accretion starting to come through in subsequent years. But look, the brands within that portfolio are relatively low visible brands, and so it takes years it will take years for Nigerian Breweries to build the equity of those brands and then start to see the numbers trickle into their profits. But you are right in the sense that there's a lot of scope for Nigerian Breweries to optimize efficiency within those three breweries and at least raise the operating efficiency to the level at which Nigerian Breweries is currently operating on an organic basis. Okay,
so then let's talk about the cost side of the picture right now as we go into a new year and we look forward to 2013, of course, positioning itself for new competition coming into the sector. But from a cost point of view, you've got the gross profit margin sitting at 47.7%, profit after tax margin sitting at 16.5%, profit before tax margin sitting at 24.5%. All those margins improved. Are you looking at the margins maintaining these improvements as we go forward?
I think there's definitely scope for the company to improve its margins. I highlighted that as those businesses are fully integrated into Nigerian Breweries operations, and they basically raise efficiencies to the level at which Nigerian Breweries operate at an organic level. You definitely see that contribute to gross margin or profitability margin expansion. But sadly, we're seeing another year of high input cost inflation, and we think that could partly offset the gains you're seeing from the efficiency side in operations. So we do expect to see relatively strong numbers again in 2012, but I think it's also important to highlight that we could also see volume numbers tested by the recent increase in fuel prices, as that could obviously induce Nigerian consumers to either change spending patterns or habits.
Okay, so let's talk about the stock's reaction and your views on that. One of the top performers on the market today, still considered richly priced, has got a PE of over 18 right now. Does the stock price, is it justified by the numbers that we saw coming through today?
On a valuation basis, we think that the company is fully valued, but it wouldn't surprise me if you see a strong 5, 6, 7% rally from here on. I think the market was obviously overwhelmed by the results, and it's natural for you to see that. Plus, a lot of investors were keen ahead of, the dividend payment, which I think will have a register closed around the 21st of March. But I think beyond that, the trade here should be a rotation out of Nigerian Breweries into Guinness, where we're seeing quite a sharp discount from a valuation perspective. So Guinness is currently trading at a 43% discount to Nigerian Breweries. We argue that I think a long-term 1 year forward discount should be somewhere around 15–17%. So naturally that discount should narrow at some point. So I'd say over the next couple of months, you're likely to see a lot more interest in Guinness relative to Nigerian breweries. Bear in mind that it already trades at par with its GME peers, and I think that investors will at some point be looking for other opportunities within the Nigerian beer sector.